Okay, so, hey guys, we just explained this in 60 seconds, right? We have the Tier 1 leverage ratio. Its exemption rule was temporary, knocked off a bunch of the denominator, made this number seem bigger, but now they're going to get smaller. And as that third bullet point says right here in the key takeaways, the ratio needs to be above 5%, or it's pretty a loosey-goosey, but most importantly, around 5 to 6% is an indicator of strong financial footing. We already see some banks taking action as of right now, because the only way to increase this ratio when the denominator is going to get bigger is to get more cash, is to get more liquidity on hand. And what does that mean for AMC and GME, as well as the ongoing market debacle, the crisis that is happening right before our eyes? Let's find out together. The only thing I ask is you guys go and watch this video all the way to the end and smash that like button early and often so that we can defeat the evil YouTube algorithm and get this video out to as many Moon Platoon apes as possible. So let's first check out this article. Citigroup and JP Morgan led bank stocks lower after Federal Reserve lets SLR temporary rule expire. This was from 10 days ago. However, this is already banks preparing for this temporary rule to expire. This was originally implemented for the pandemic to be able to get better banking to become a little more risky, take out a couple more loans, right? Be a friendly neighbor when it came to the pandemic, pushing everybody down and making it harder and harder to find a good bank. But now this is going to expire. They think the pandemic is going to ease up and it's time for the big money to stop trickling down into people who actually need it and start, it's essentially like a break from the government, right? This break was to help with the pandemic, and hopefully the banks would pass on the goodwill. Maybe they did, maybe they didn't, but now that's over. No more breaks from the government, and unfortunately, there is going to be some important fallback from that. There is a temporary rule, let's explain it one more time. It allowed banks to exempt treasuries and deposits at the Fed from the SLR. This was implemented as an emergency measure to give the financial institutions flexibility to provide credit to households and businesses during the COVID-19 pandemic, right? You essentially loosen the purse strings a little bit when you go through a tough time, like you crack open the piggy bank. Usually it's for the swear jar, but now it's the rainy day that we've been saving for. So that is what the temporary rule, SLR rule was. Now it's coming to an end. While some analysts expected forced selling of positions, remember we needed that dollar sign in the numerator to get higher, tighter swap spreads and higher repurchase rates, Credit Suisse analyst Zoltan Pozsar does not expect a dramatic effect from the expiration because it didn't have a major impact to start with. The change won't lead to forced sales, neither will it cause a constraint on the functioning of the Treasury repo market, says this one analyst from Credit Suisse. As a reminder, since the time that this was written, Credit Suisse had liquidated one of its hedge funds. So as of right now, Credit Suisse also under some pretty tight scrutiny. Overall, he doesn't see any restraints driving forces selling by holding companies, he wrote. Earlier this month, Goldman analyst Richard Ramsden said the expiration would require the biggest banks to issue preferred equity, turn away deposits, or send capital downstream to bank subsidiaries, reducing the amount of capital that would go to the shareholders. Morgan Stanley strategists expect similar actions in response to the expiration. Essentially, they need more money, and in order for that ratio to stay high, remember that 5 to 6% range, they need to essentially take their positions and get out. Right? Exit their positions, which we've already talked about, is likely going to cause some stocks to tumble. He estimated that Bank of America already down 2.3%, Citigroup down 1.29%, and JP Morgan Chase down 2.4% would end the year below SLR minimum requirements. Remember that this is likely going to cause either huge ripples through those banks in particular if they don't exit their positions and get their SLR higher, or it's going to cause even bigger ripples if they do sell, coerced selling essentially, their positions and get more money for their SLR, but then at the same time tank a couple of stocks on the way. Still, that doesn't mean that there won't be any effect. Ahead of the Fed's announcement, holdings at the primary dealers dropped by a record $64.7 billion to $185 $0.8 billion in the week through March 3rd, bringing them to the lowest level since 2018, Bloomberg reported on Wednesday. Go check out this Seeking Alpha article. I'm going to include it in the description so you guys can make sure that we are journalists trying to bring together the news for you, but we also want you guys to show some love to the sources. Speaking of which, let me see right here. Boom. So trillions to be added to the SLR calculation. This is from a Reddit user, oh, deleted. Okay, from 29 days ago. However, this is one of the comprehensive understandings of what the SLR rule is likely to do, right? It's said here. Oh, this is also just recognizing that article here. So I wanted to point out, where's my other one? Well, the main point is I'm also going to include this Investopedia article here about what the tier 1 leverage ratio is, right? It doesn't have to be just cash. The tier 1 types of assets here can be any kind of assets that are liquid enough, right? That essentially you can turn into actual cash, into actual proper liquidity if there was a financial crisis that you need to cover. Right? Some of these banks are likely going to be involved in the oncoming financial crises, either caused by or triggering the GME and AMC squeeze. So I want to be able to fully ask you guys, what do you think? Because now that we've covered a couple of the truths of the world, the rest, the forecasting, the speculation is next. So I want you guys to be able to fully listen up and do your own research. Remember, I'm not a financial advisor or a legal advisor, so the most important piece of your financial education is by you. And if you guys can go out and take a quick look at that Investopedia article, show the sources some love as always, I would appreciate it if you also could show this video some love, smash that like button, join the Moon Platoon by pressing that subscribe button or the join button next to that subscribe button, and join one of these people right here, right there, or right there. You can also do it through Patreon. So again, thank you for supporting the show, and I will see you in the money.